very good evening to everyone. I hope you all are fine and doing well. So today we are having foundation batch demo class where we are going to learn about all the strategy related to the BFM examination. So in this class we will learn about the concepts, like which concept is most important in BFM, and also we are going to learn about whole syllabus. So let's start this class. So first we are going to discuss about what is the meaning of BFM and what will be the strategy to crack this exam, right? So if we talk about BFM, that is one of the compulsory subject, right? And CAIB exam is very important for banking professionals. Why? Just to enhance their knowledge and they can update themselves professionally. So BFM is one of the important paper as it involves technical and analytical skills. Here, to clear this exam, we need to develop a focused and strategic approach to master the BFM. So let's learn about which modules are there in this. Before starting, this is my introduction. You can check it out uh, about me. Okay. So bank financial management, everyone is saying that this subject is very typical, but if you have correct knowledge, if you have correct understanding of the concepts, this exam is not a tough exam. So this is the subject that covered in CIIB examination, and in this we have four modules. Module A is all about international banking, and this module is very important. Why? In this you will see numericals, case studies, as well as concepts. Lots of concepts are there related to the international level banking, and lots of topics are there. We will discuss about these topics also. Module B is about risk management. In this module we will discuss about different types of uh, risk that are faced by banks and how banks manage these risks with proper management framework. Then we have treasury management of treasury we are going to learn in this, and then how to manage assets and liabilities in a bank. We are going to deal with that management in this module D. So let's discuss with module A, international banking, and first chapter is exchange rates and forex business. Exchange rates and forex business, what is this? See, if I talk about the exchange rate and forex business, in this we are going to learn different types of concepts. What are the guidelines? What is FEMA? What is FERA? What is foreign exchange arithmetic concepts? And also what is the global participants in this? And what is the role of the RBI, FEDAI? We are going to learn about this in this chapter, and also some numerical are also there. Then LRS. If someone wants to send money abroad, that person can send the money, but up to a limit, and there is a limit prescribed which is US dollar 2,50,000, right? US dollar 2,50,000. In this we will learn about permissible and non-permissible remittances, tax collected at source, important topic. See, we are going to learn everything in very easy manner, right? Don't buy any type of book, just think about the PDF, learn PDF, revise PDF, that is enough. Then correspondent banking. What is correspondent banking? Suppose if anybody in India wants to Any Indian bank wants to serve their customers in US, but there is no branch available in the US. So Indian bank will deal with the US bank, and they say to that US bank that please serve my customers on my behalf, I will pay you a fee. That concept is correspondent banking. In this, we have Nostro, Vostro, Loro account, Mirror account. Swift is one of the famous communication system in which banks exchanges messages, and 11,000 plus banks are connected with Swift. Chips, chaps, they are related to US and UK. RTGS is there in India. And NRI banking, what is the meaning of NRI? According to the income tax and according to the FEMA, right? Then we are going to learn about documentary letter of credit. See, this agreement, this is a type of a agreement between the bank of buyer and bank of exporter. So exporter and importer can do their business without any problem. They don't feel about payment and exchange of goods. All these things are done by the banks, like bank of buyer and bank of exporters. They deal, they do a agreement. Due to that agreement, all the things are happened in a trade, in international trade. There are types of letter of credit: red clause, green clause, revocable, irrevocable, standby, usance. Many different types of LCs are there, but currently revocable LC is not available anymore, but irrevocable LC is there, which is one of the famous LC, right? Then we have very important Incoterms 2020, in which there are 8 terms that defines the responsibility of buyer and as well as responsibility of the seller. And then URR, this is also important, we are going to learn in this. The chapter is very long, conceptual chapter. It includes case studies and a very good chapter, interesting chapter. Then what are the facilities are available for exporters and importers? What is EDPMS? This is a portal just for only the exporters. IDPMS, this is the portal just for only the importers. Then what are gold card scheme for the importers or exporters? What are the facilities? Because without facility, how exporters can grow? So there are some facilities are provided to the exporters so they can do their business freely, right? Then we have ECB. What is external commercial borrowing? If I give you the little overview, because here I can give only the overview about the ECB, external commercial borrowings. This we can say it is a type of borrowing or a type of loan, right? Where these types of loan are you can understand these type of loans are the in the foreign currency loan, bonds and other type of credit instruments that eligible Indian entities borrow from non-resident lenders. Due to this money, basically due to this loan money, they acquire the asset, they fulfill their other business needs, and also they do the capital expansion, right? Then this is about the ECB. In this we are going to learn about different things, what is the meaning of eligible investments, what are the probated sectors, what are NDI, how to convert ECB into equity, how to pay all the loans. We are going to learn in this ECB 1. Then we have risk in foreign trade. Here first we will discuss about what is risk, what is the various types of risk, then what is the meaning of ECGC, what are the products of the ECGC, and what is the meaning of country risk. Lots of types of risk: liquidity risk, market risk, credit risk, operational risk, reputational risk, country risk, concentration risk. Lots of risk are there. Then what is the role of Exim Bank? What Exim Bank actually do in the favor of exporters and importers, what are the rules of FEDI and FDI, we are going to learn in this. Then yes, this is I think last second chapter in module A, in which we are going to learn about IFSC. IFSC, why IFSC are so much popular nowadays? What is the gift city? Because first gift city is there in Gandhinagar, Gujarat. What are the role of the IFSCA? Then technology in the international banking, like how the fintechs are evaluate, and why banks are eager to work with the fintechs, why fintechs are so popular, what is the traditional method, what is the difference between the traditional manual method, and what is the blockchain technology, we are going to learn in this chapter. So this is only module A, in which we are only talking about importers, exporters, and all about their businesses. That is module A. That's why module A is little bit important. If we compare with other modules, module A is important. Then we have risk management, in which we are going to discuss different types of risk. This first one is about trinities of risk, and there are three trinities of the risk, that is risk, capital, and return. Very short chapter. This also tells about the banking book, about the trading book, about the banking risk definitions. Next chapter, this is very important chapter, very long chapter. This tells about Basel 1, Basel 2, Basel 3rd. Now we are following Basel 3rd, in which there are three principles. Principle 1 is about minimum capital requirement. Principle 2, sorry, pillar 2 is about the first one is minimum capital requirement. Second one is about just a second. Third one is about market disclosure. There are three pillars. One pillar, second pillar is about. Just give me a second. That is slipping from my mind about the pillar second. Let me check. Yeah, sorry. Second pillar is supervisory review process. In that regulators supervise the things, that is supervisory review process. Sorry for this. So third one is market disclosure. We will discuss about this. I'm just giving you the overview of the syllabus. Market risk is basically when the factors in the market changes, and due to these factors loss occurred, that is called market risk. Then we have credit risk, in which bank gives the borrower loan, but borrower unable to pay the loan, that is called credit risk. Operational risk is one of the dangerous risk. Why? Because this risk occurred due to people, processes, and external events. Why people? If people do error or any type of theft, fraud, process, technology failure, external event, COVID-19 situation. Liquidity risk management. Liquidity risk management, we can say shortage of cash is called liquidity risk. Shortage of cash in the bank, and this is the ICU of the bank. ICU risk of the bank. Then we have LCR and NSFR, two important, very important ratio. Always there is 1-2 questions are there from this chapter. Very important ratios. Then module C, treasury management. In this module, basically what we are going to learn in the treasury management. What is the meaning of treasury management? If we talk about the treasury management, that is the strategic oversight, how to use the bank financial resource to just ensure liquidity, to just manage the risk and achieving the financial objective, right? In this, they invest the surplus fund, they mitigate the financial risk, also they manage the cash flow. All these things are there in this module, that is treasury management. Okay, in this first chapter is all about the concept. Then some products are there, products of the treasury are there. Third chapter is all about in last we will see a topic discussion also, a quick topic discussion, so that will help you that what how you are going to learn in the classes. So that's why I'm going very quickly from here, because it is important to know about the syllabus. Then we have international equity and debt products, some reserve assets, cash reserve ratio and statutory liquidity ratio. And if you have any doubt, you can also ask here. Then we have LAF, the liquidity adjustment facility. That is the LAF. What is this LAF, liquidity adjustment facility? See, we can say this is very important concept, LAF. Why important? Because that is liquidity adjustment facility, which is a monetary policy tool. A monetary policy tool in which central banks like RBI, they use this to manage the liquidity and control the short term interest rate in the banking system, right? This is a monetary policy that central banks like the RBI uses to manage liquidity and control the short term interest rates in the banking system, right? Okay, then we have here treasury risk management, and in this very important is this value at risk. What is value at risk? This is a statistical method which used to determine extreme losses situation. That is value at risk. Then we have different derivative products: forward, option, future, swap, interest rate, currency swap, most important, right? And then what is asset liability management? How to manage asset and liability in a bank? What is the meaning of liquidity risk? When there is shortage of cash. Interest rate risk, when there are the changes in the interest rate. That is interest rate risk. Role of treasury. Why treasury is required in the ALM? How to use derivative in the ALM? Then policy, environment, credit risk, credit derivatives we are going to learn in this particular chapter. This is module C, but easy module if we compare with module A and B, but important. Then last but not least, balance sheet management, how to manage asset and liabilities. So we are going to learn from scratch what are the components of bank balance sheet. And if you are from the sciences background, that is not a problem also. We will discuss every term here. Okay, then what is asset liability management? What is the purpose? Like in this chapter we are going to learn everything about asset liability management. Then important chapter in which we are going to learn about these three pillars, very important pillars. How to make the capital adequate, all the techniques we are going to learn in this chapter. Then we have asset classification. Assets are classified into different forms. What are these types of asset classification? And also provisioning norms, how to maintain provisioning ratio, we are going to learn in this chapter. Liquidity management, where how to manage the liquidity, how to maintain the enough cash. Then we have interest rate risk management, and last we having RAROC, profit planning, risk aggregation and capital allocation, economic capital, and also RAROC. RAROC is one of the most important method that checks the profitability. So that is the syllabus, right? Before moving to the strategy, first let's discuss about the topic LRS. So it will be helpful for you. Let's learn about first LRS. Okay. So let me share this LRS concept with the example of like a story that will help you to understand this concept better. Okay. So suppose there is a person Rohan, and his dream trip is there. Rohan and his dream trip of $250,000. He want to do a trip of $250,000. Now he is software engineer from Bangalore, right? One day he decide, I want to travel for 15 days. He decides he want to travel Europe for 15 days, like 15 days trip. Now he goes to his bank and say that I need US dollar, euros for my travel. He is talking about currency. So I need US dollar or euros for my travel. So obviously in bank he got the reply, okay, that means you want to use your LRS money, and okay, you will get that LRS money, that is the passport of your money. Means just like you need a passport to go abroad, right? Your money also needs a permission card to go outside India. That permission is called liberalized remittance scheme. Means any resident that is Indian, any Indian resident can send up to US dollar 250,000 per financial year, April to March, per financial year, for permissible purposes only. So is this Europe trip allowed? Obviously this trip is allowed, this travel is allowed. Clear? What is LRS? Any Indian resident can send or spend $250,000 per financial year, right? So now after getting the approval, Rohan start writing about their needs, all the needs that Rohan needs in his travel. So the estimate, roughly estimate is there 32.4 lakh. So obviously that comes under this category, within this category. So that LRS is allowed, that liberalized remittance scheme is allowed. But what happen if the limit exceed this amount? So in that case, that type of expenses are not allowed. But in the case of medical emergency, like medical treatment or education abroad, in that case this limit is extended, but with the permission of RBI. And also in the case of medical problems, there is a proper prescription needed from the doctor of that country that will show that this much amount needed for the medical emergency. So and then RBI will approve, then this limit can be expanded. And same thing is there in the case of education. Clear? Okay. Now if Rohan asks that can I send some money to my cousin who is studying in Canada, is that allowed? Yes, this is also allowed. This comes under the gift or maintenance of relatives. Maintenance of relative means any person in the India can maintain their close relatives. The definition of close relatives also different. right? And some other activities are also there which are not permitted in the LRS, like gambling. Gambling is not allowed, and sponsorship or subscription of magazines which are banned in the India, that is also not allowed. But a person can spend up to $250,000 in a year, in a financial year, for permitted purposes only, right? And yes, there is also the concept of TCS, tax collected at source. Suppose if someone is remitting $250,000 abroad, right? uh, and TCS is the concept in which up to 7 lakh there is no deduction, but more than 7 lakh there is a deduction of some percent. And in the case of pen card and Aadhaar card, if a person is not having pen card or Aadhaar card, that deduction becomes 10%. But a person is having PAN card or Aadhaar card, only 5% is deducted. But in the case of educational loan, only 0.5% is deducted after this limit. So this is the only overview of the TCS. I just give you the overview. We will discuss in deep everything in the classes. So it's just a type of overview. I hope that this thing is clear, that what is LRS. A quick overview I gave you about the LRS. If any problem is there, so you can tell me. So LRS at the last allows travel, study abroad, medical treatment, gift, donations, maintenance of relatives, investment abroad in the shares or property, or you can also open foreign bank account. But you can't do gambling, you can't play lottery, you can't do any type of you can't purchase any type of banned items, and any type of crypto purchase. So this is the little overview about the LRS. Now let's discuss about the strategy here. How can you how you have to crack this exam? That is very important, because with the proper strategy we can conquer anything. And yes, one thing always keep in your mind: you are already cleared JIIB, you are already a star, only some exams are left, so you can do it. If you can do JIIB, CAIIB is also nothing. So that is the time you have to just focus on the concepts, that is enough. So first, most important thing is understand the syllabus, because that is very important. Understand your syllabus, just go through with the syllabus, that what is the syllabus, what are the things are in the syllabus. And yes, most important, numerical questions. Do numerical questions as much as you can. I will give you all the numericals according to the chapters in the lecture, some in practice, some in homework, right? So numerical questions, use mock test and MCQs. Do mock test and MCQ as much as you can. Revise with the short notes. Only PDF are enough. PDFs are enough. No requirement of any type of book. And yes, motivation is very important. I know it is very difficult to maintain your professional and personal life. So create a practical timetable. Give love to your loved ones. Take out time for them, and also manage your professional life. Then yes, if you can dream it, you can achieve it. So don't worry about anything. If you already think about the CIIB, that means that exam will be cleared one day. And which module is important? So module A is most important. Module B is important, but module A is still most important. C and D are not that much important, but we can't skip C and D. These are also important and easy one, right? So yes, give time to your self study, because self study makes the person better. So give time to self study. And apart from this, if you have any type of issue in the uh, class, in the PDF, contact me, tell me in the community, tag me directly. If you feel any type of problem, like you are not getting things, try to attend live classes at 8 a.m., right? And if you feel that PDF problem, in lecture problem, so you can just tell me. That is appreciable. So let's start this journey together, and let's conquer this exam together. I hope that today's session is helpful for you. If any problem is there, so kindly ask. So uh, our next class is for chapter 1, that is exchange rate and forex business. Try to make interactive session, try to make answer everything, so it will be helpful for you, me also. So it is that is it from my side for today. I hope that it is helpful for you, it is understandable for you. So thank you so much. Let's meet in our next class. Till then, take care and have a good day all. Thank you.